Hello and welcome back to a very chilly London. Gold had its best month in 3 years in January, but why, I hear you ask? Well, that's a question I put to Chris Beauchamp from IG.
Driven primarily by the ECB, it does seem odd to see gold rallying away once again, but it's of course the resurrection of QE as a monetary policy tool. The decision of the ECB finally to opt for this after months and months of speculation really gave gold a lift. It lifted equity markets as well, but gold clearly, the prospect of a central bank being active once again after we've got used to the Fed stepping away from that stance means that we had a really good month for the gold prices. People bought an investment that of course doesn't have a yield at all, but it doesn't have a negative yield as well. So when you look at Eurozone bond yields falling down, gold becomes attractive once again.
The flip side to that is that we have a central bank doing what it takes, as it were, to secure growth in the Eurozone. So isn't it that risk off the table?
In a sense, it's clearly a sign that all is not well in the Eurozone, and that's something we weren't exactly unaware of in the last few months. But I think people would they saw the disarray in the Eurozone, they saw the fact that the austerity consensus, if you like, was beginning to fall apart. France, Spain, Italy, very unhappy, and of course Greece now. So the idea of the central bank stepping into the breach and, if nothing else, buying the Eurozone time is clearly a good sign for risk appetite. It means that you can be confident the ECB is standing behind you with 60 billion a month in bond purchases.
Yeah, so you're right, it's a non-yielding asset. So when we do see the Fed hike rates, which might be June, might be later, surely that's going to kill the gold trade.
Well, I think in a world where the Fed is going to raise rates eventually, then the longer-term outlook for gold still does look less attractive. But then, of course, you have other safe haven issues, if you like. Continued conflict in Ukraine, Russia still flexing its muscle, so there's a major worry there. You have the Middle East as well looking very unstable. Even East Pacific region looks very difficult as well, I think, for the outlook. So people are still happy to hold gold as part of a portfolio as a hedge against uncertainty. I think one thing 2014 taught us was that uncertainty really is back on the agenda.
Does the same go for silver as gold bolsters? Will the same happen for silver as well?
We had a bit of a bounce for silver, yeah, not quite as spectacular really. Industrial elements, of course, played a part there because a lot more silver is used in industry than gold. So we have concerns about weakening demand in China, even in the US as well with those GDP figures. So less of a boost there, but always they tend to move to some degree in tandem. So silver getting a bit of a lift as well.
So can you give me some key levels for gold? Is it looking like it's going to break higher?
Well, we had a bit of a pullback from 1300, so there's your first level to look for. If we do get maybe a bit more research, perhaps as the ECB QE actually kicks in, and then we're looking towards those summer highs at about 1330, 1340 on the upside. Then again, we might see a weakness back in the direction of 1250 perhaps, if the stronger dollar rears its head and pushes gold down once more.
I just want to finish off with oil. Seen that you've been writing about it as well. It seems that $50 level for Brent is starting to look vulnerable.
It is. We finally discovered that oil can go up as well as down. We had the strongest one-day gain for Brent on Friday since 2009. But crucially, this might just be the first pullback we've had in a while in gold in that downtrend. A lot of people looking maybe to still short oil, and crucially, it's not back above the month high. So until we really get a push, I think above $60 a barrel, I think the outlook still looks bearish for Brent.
Well, thank you to Chris for his insight and analysis. Stay tuned to Copy TV for much more of that. But for now, goodbye.